Hey, what's up, stock compounders? Brad here. So, the Berkshire Hathaway annual shareholders meeting happened yesterday. I'm sure I don't need to tell many of you. Over 6 hours of footage from this event. It's the first time in 3 years that this meeting has taken place in person. Okay. So, it was an action packed event. I wasn't able to make it this year, unfortunately, but I did get to live vicariously through a number of you who I'm connected with on Twitter and elsewhere. But I wanted to share my highlights from this year's 2022 Berkshire Hathaway annual meeting. There was plenty to talk about in this one. So let's dive right in. Right off the bat, Warren inserted some humor into the conversation here. Now, something he's talked about in the past, he said, we try to buy businesses that an idiot can run because someday an idiot will run it. And he had a different flavor around that this year. He says, we try to find something a guy with Alzheimer's can run. It really got the crowd, really unleashed the energy in the crowd. That was pretty good. A lot of purchases were made in the first quarter. So the previous 5 quarters before Q1 of 2022, Berkshire had been a net seller of stocks. Okay, for 5 straight quarters, net seller of stocks. In the first quarter, they bought $52 billion worth of stocks. Okay, Allegheny Corp, Chevron, Activision Blizzard, a couple German companies that Buffett alluded to in this annual meeting, and a Japanese company. Those are some of what was purchased in the first quarter. So, it was a lot of activity, particularly from February 21st until March 15th. Okay. That's when the real activity happened. That was $41 billion in purchases just in like that 3.5 week time frame. So very active on the buying in Q1. In terms of, so there's a few different categories that Buffett really spent some time on. The first was speculative excess. That's the first one I want to get into here. Buffett said, sometimes the market is quite investment oriented. Other times it's almost totally a casino. That existed to an extraordinary degree in the last couple of years, the casino-like behavior of the stock market participants. That's encouraged by Wall Street because the money is in turning over stocks, right? It's that activity that generates fees for Wall Street. People say how wonderful you would have done if you had bought Berkshire Hathaway in 1965 and held it, but your broker would have starved to death, right? And here Buffett is really just pointing out the incentives of Wall Street versus, the incentives of investors, right? They're quite misaligned. And in recent years, Wall Street has really cleaned up in terms of being the party that has really gotten richer from all of this speculative activity in the market. Wall Street makes money catching the crumbs that fall off the table of capitalism, right? So right there in that statement, you can tell Buffett doesn't have a whole lot of respect for that particular way of operating in the stock market. They make a lot more when people are gambling than when they're investing, right? We covered that. It's almost a mania of speculation that we now have. A mania of speculation. It's weird, this is Charlie, it's weird that we ever got a system where all this equivalent of casino activity is all mixed up with a lot of legitimate long-term investment. I don't think any wise country would have wanted this outcome. So next, he's asked about market timing. Okay, the guy who asked him the question thought, Buffett is a spectacular market timer. Buffett had something different to say about that. We haven't the faintest idea what the stock market is going to do on Monday, right? The annual meeting was on Saturday. Buffett has no idea. Munger has no idea what the market is going to do on Monday, just 2 days later. We've never made a decision based on what we think the market is going to do or what the economy is going to do. In 2008, we spent a big percentage of our net worth at a very dumb time. Okay, this was like $15 or $16 billion, which was a much bigger piece than it would be today. He said, if I had any sense of timing, I would have waited 6 months to deploy that capital. Again, I totally missed the bottom in March of 2020, right? Did not time that well at all. We have not been good at timing. We've been reasonably good at figuring out when we're getting enough for our money. Okay, that's the game that Warren Buffett and Charlie Munger play. Are we getting enough for our money? It's not about what do we think is going to happen next week, next month, next year. We always hope it goes down for a while so we can buy more. Okay, most people, when they buy something, they want it to take off, right? They want the market to show them how smart they were to have bought at that price. Buffett wants it to keep going down for a while, right? Because usually they don't take a full position all at once. If it goes down after they initially buy, it's just more attractive, right? And so they'll keep adding. We hope even after we're done buying, okay? So they get the maximum allocation that they want into a position. We hope even after that, and we run out of money on it, that if it's cheap, the company will keep buying, in effect, taking our interest up, okay? So very different from how most people think about kind of short-term price fluctuations in the stock market. Very business owner oriented. We haven't ever timed anything. We've never figured out insights into the economy. Okay, so Buffett's really trying to correct the questioner who thought Buffett had some sort of ability to time the market. The next question about inflation. This was asked by a young person, okay, which I think colored the answer a bit. So the best thing you can do in a high inflationary environment is to be exceptionally good at something. If you're the best in town at any valued activity, people will have to compensate you for it. The best investment by far is anything that develops yourself. Nobody can take away from you the talent you have. Figure out what you'd like to be, which is what you'll likely be good at. What do you naturally bring to the game, right? What are your natural strengths? If you can merge that with what the market values, what the market will pay you for, that's a sweet spot. And then Buffett inserts some humor here. He says, Malcolm Gladwell would just say, spend 10,000 hours on something. I could have spent 10,000 hours trying to become a heavyweight boxer, but I don't think I'd have felt very good at the end of the 10,000 hours, right? Clearly Buffett, he doesn't have the attributes to be a successful heavyweight boxer. So you've got to know, what are you naturally bringing to the game? Play to your strengths. You stumble into what you really like doing, what you're good at, what is useful to society, and then inflation doesn't make any difference. Okay, and I really like this answer from Buffett on this question of inflation, right? Everybody's kind of so singularly focused on, what assets are going to do best in an inflationary environment. And Buffett steps out of that whole conversation and says, well, it's actually what skills, right, can you develop that are going to enable you to maintain your earning ability in a high inflationary environment. And then they talked a little bit about Robinhood, not particularly nice things to say about Robinhood. And then Buffett said, whether it's a good idea to go around making enemies of people, though, is another question. Okay, you could apply this to Robinhood. You could apply it to crypto and Bitcoin. Buffett, is it wise to criticize people at all? Charlie, probably not, but I can't help it. Okay, so I got a kick out of that one. Okay, moving along here. And then, so Buffett used to be a pretty outspoken proponent of Planned Parenthood, okay? And, there's a long history around that in Berkshire Hathaway. And so Buffett was kind of talking about why he's changed his tune on that. And Charlie jumped in at the end. He said, even more than you, I have to be very careful about what I say. And I wasn't quite sure what to make of that. It seems to me that Charlie doesn't have much of a filter. But perhaps there's even, maybe we're just seeing the tip of the iceberg when it seems like Charlie is really just saying exactly what's on his mind. It can be a little rough around the edges. Maybe there's actually a lot more that we're not seeing. On Activision, okay, there was some controversy in the press about Activision a number of months back that, maybe Buffett had some inside information that Microsoft was going to make an offer to buy Activision, and so Berkshire was buying before that, which was, refuted by Berkshire Hathaway. But what's much more interesting to me is that Buffett has been buying Activision, okay? He says, one of the things I bought was bought for a different purpose by a different manager months earlier, okay? They bought roughly 15 million shares of Activision. That was Ted or Todd. I'm not sure who that was. But in January, Microsoft announced they were going to buy Activision for $95 a share. When they announced that, at that point, Activision becomes a different kind of security to Warren Buffett. It becomes what Charlie and I used to call workouts. And if you go back to the original Buffett partnership letters, you can see, generals was a big category of stocks, businesses that Buffett owned. There were also workouts. There were a few different categories. And this is the workouts. It's kind of these corporate actions, corporate events. So it's kind of a throwback. Buffett hasn't, I don't think, had a chance to do a workout in quite a while. Largely because they're working with such larger sums of money today than they did way back when. And there's just fewer opportunities, fewer workouts that can really move the needle for Berkshire Hathaway. These are securities, these workouts, securities whose value depends not on what the market price does, but whether an announced corporate event occurs. Okay? So whether Microsoft actually acquires Activision or not. Charlie and I, 50 years ago, used to do a lot of that sort of thing. It hasn't worked very well in recent years. So the announcement here is that Berkshire now owns 9.5% of Activision. So I think once they get to 10%, they have to file disclosures, and we would know very quickly if Berkshire owned 10%. But Buffett's kind of letting us in on this since it is under 10%. On China. So Charlie Munger had a few things to say about China. He didn't get into Alibaba, the recent sale of Alibaba through Daily Journal, but he speaks more broadly about China. There's no question about the fact that the Chinese government has worried the investors from the United States who invest in China more in recent months. There's been some tension, and it has affected the prices, particularly of Chinese internet stocks. Just in the last day or two, the Chinese leader has reversed course on that. Said he went too far and he's going to pull way back. Okay? Good news for U.S. investors investing in China. The reason I invested in China is I could get so much better companies at so much lower prices. And I was willing to take a little political risk. Interesting that Charlie says a little political risk here. Clearly the political risk has really been exacerbated by the media, right? It's really gotten a lot of airtime. Charlie used the word little. Willing to take a little political risk to get into the better companies at the lower prices. Other people might reach the opposite conclusion. Okay, and there are many investors who seem to be reaching the opposite conclusion. Everybody is more worried about China now than they were 2 or 3 years ago. Okay, so that's what we got from Charlie on China. This is the last piece here. It's about crypto, Bitcoin specifically. So Buffett really took a lot of time in this annual meeting to talk about crypto, sometimes not directly, but he talked quite a bit about the US dollar, okay, and how it's really the only currency that we have. You can kind of read between the lines there. But on Bitcoin specifically, he laid this out. If the people in this room, speaking to the entire Berkshire Hathaway meeting, right, everyone there, 30, 40,000 people, I don't know how many it was. If the people in this room owned all the farmland in the U.S., and you offered me a 1% interest in it, and you wanted, say, $25 billion for it, I'll write you a check this afternoon, okay? That's the kind of investment Warren Buffett is interested in. An ownership stake in farmland, right? An asset, a productive asset, something that produces something year after year. Another example, if you tell me you own 1% of the apartment houses in the U.S., and you offer me an interest for another $25 billion, okay? I'll write you a check. That's something that Warren Buffett is interested in. Again, you've got these apartment houses, they spit off cash, right? Month after month. You got tenants paying rent. Now, if you told me you owned all the Bitcoin in the world and you offered it to me for $25, okay, Buffett's really trying to make his point here. Before he was using 25 billion as the example. Now, if you offer all the Bitcoin to me for $25, I wouldn't take it because what would I do with it? Now, to be fair, if Buffett owned all the Bitcoin, it's probably not very valuable, okay, for one person to own all the Bitcoin. But, you know, we can move on from that. But the point here is, what would I do with it? It's the difference between productive assets and something that depends on the next guy paying you more than the last guy got, right? It's the greater fool theory. For this investment to work out, you're dependent on a greater fool to come along and pay you more. So Buffett, you know, is really putting Bitcoin in the camp of tulip mania here. He doesn't see the value in it at all. And then he holds up a $20 bill. This is the only thing that's money, okay? Currency backed by the Federal Reserve, at least in the U.S., right? He's talking about U.S. money. So, you know, Buffett and Munger, they don't like Bitcoin. Charlie chimes in here. Charlie can't help but chime in when it comes to Bitcoin and crypto. So Charlie says, in my life, I try to avoid things that are stupid, that are evil, and that make me look bad in comparison with somebody else. Okay, so those three things. Bitcoin checks all three boxes. It's stupid because it's very likely to go to zero. Okay? Boy, I hope Bill Miller was in the crowd here. The guy who went on Wealth Track and said, Bitcoin is my most bullish bet for the next, I think it was decade or something like that. That I would have loved to have gotten Bill Miller's expression throughout this whole treatise here. So stupid because it's very likely to go to zero. Evil because it undermines the Federal Reserve System and the national currency system, which we desperately need. Okay? So this gave me some insights into why Buffett and Munger are so against this thing. Third, it makes us look foolish compared to the communist leader in China. He was smart enough to ban Bitcoin in China. Okay? It's funny. I think this came after, Buffett talking about how, is it smart to criticize? Is it smart to alienate, a bunch of younger people who are, almost religious about crypto and Bitcoin? Whether or not it's smart, they did it. And they continue to do it. So we've kind of come to expect it from Warren Buffett and Charlie Munger. And, they have some points, certainly. But I do think they're painting it with too broad of a brush. I'm not a Bitcoin fanatic. I'm not a crypto bull by any means. But I think it is a little bit dangerous as an investor to write off something like crypto without really taking a dive into the space and learning about it, learning about the underlying technology. Because I think it does have a lot of potential to disrupt many, many businesses. And I think if you're not able to adapt, if you're not willing to adapt to the transformations, the kind of the evolution, the technology evolution taking place within that space, it's a dangerous place to be. And I'm kind of echoing Guy Spears' take on the situation as well. So I cringe a little bit when I hear Munger and Buffett talking about crypto. But, they're entitled to their opinions. And they have very strong ones. So always makes headlines. Never a dull moment with the crypto headlines coming out of Berkshire Hathaway. So that's it, guys. Just wanted to share my highlights from this year's in-person Berkshire Hathaway annual meeting. If any of you went, let me know in the comments. Let me know what your highlight was from the weekend. I didn't make it this year. I am going to prioritize making it next year. I have two very young kids. It was just too logistically difficult to make it out this year. But I had a ton of FOMO. So it is a top priority next year. And hopefully Warren and Charlie will be sitting at the head table next year as well. So thanks for watching, guys, and I will see you all in the next video. Take care.